Hi everyone, welcome again to my channel. It's been a massive profitable week for those of us trading gold here in Trade CFX Academy. And like we predicted, go back to my videos I did some time back. You will see all the setups we made, and I think they all played out. And just to show you guys how I took this trade, what made me take these trades that I have here on the on the dashboard so that you guys can see for yourself how to properly place your setups. Now you see I took this trade, gold came in, tapped into this. We had like good sniper entries, just tapped and moved up. And the same thing happened here during the CPI news. We came and then gold did the same thing after we discovered. I mean, we looked out for the liquidity grab and all that. We actually made this point our point of entry, but price did not tap into it. So it was still valid for me. And then came the CPI news, whoop, just tapped in, and then we headed straight for these obvious equal highs. And you see, nice trade we got here. We got 1 to 4 risk reward. We got here 1 to 5 risk reward. It was just a beautiful, trade setup. So right now I'm going to show you guys how I made the setup, how I, analyze my markets, and you know, so you can as well do the same. It's so simple, guys. Keep it simple. Like we always said, all those fancy stuff that you get to see online, just so many trend lines, just so many days. Well, it works for some persons, but for those of you who cannot comprehend, basically you just have to keep it simple. Now, why do we say keep it simple? I mean, you don't have to overcomplicate your trades. You just have to find out where are my institutional levels, what is going on, are there any trends in the market? Where is the origin of the trend? Always look out for the origin of every trend because there lies, a lot of orders that the big banks will always come back, tap into it, and then make their move. So we are going to start all over from scratch. I'm going to take up all these markings that I have done here. Yeah, taking out all these markings that I've done here. So let's get into it. So previously last week we had this very nice, very nice structure here. Price came in, tapped into this structure. I like to mark my, let me just expand it so you get to see. I like to mark my box to the tip of the red candle down to the base of it. Yep, this is how I mark my stuff. Now you can see the price came in. This was my entry model setup from here, because I saw this, big move after price came, took out liquidity from this angle. You have to go way back. I don't want to go way back. I just want to, dwell on the present. So price came here, took out liquidity. And if you check out my previous video, I already marked this point as our point of interest. The price came up and then we had this massive move. Immediately price tapped into this down to the upside. Now on saying this, what I did was I just marked up the obvious high. Yeah, and price actually came and took the high up. Now where is the origin of this move? Price came this way, came up here, broke structure, and then you see price rally along this area. This was where the move originated from, that pushed price up. So this became my point of interest. Mark at the tip of that red candle, and then here. Now you see what happened. This was my setup for the week. My target is this equal highs down here. Sort of equal highs around here though. This was my target. What the price do? Price came, did let me increase this a bit so we get to see what we're all right. So we just have to put this a bit down here. Got it. So price came. Now if you watch closely, you see that price is not actually tapped into our point of interest, but this was where it came in. You see, real clean entry, no complication of trade, no fancy whatever. Once you can spot, I'm just going to go down here. The first thing I want to do is when I try to analyze the market, I number one, let me just type it down here. Number one, I check for my directional bias. No, my directional move. Let me use wait, yeah, directional move. Yeah, that's it. And number two, what I do is where I'll put number two this way. Where is price coming or leaving from? In other words, I'm talking about the origin of the move. Yeah, sorry, my grammar leaving to, okay, let me just correct that. All right, so I have this as my number two. Check for your directional bias and where is price coming from or leaving to. What we are looking for is the origin of price. Now, the third one we want to look out for is a break. Number three, a break of structure. What we mean by that is the move we are talking about, did it break structure? If the move did not break any structure, it is not considered, valid. So now we want to look out for a break of structure after price moves or leaves the origin. Yeah, that will be our number three. So this is what we are looking out for. Check for your directional bias. Is price bullish or price bearish? And that you can find in the higher time frame. I'm not going to go through this in this video. I'm going to teach that in other videos, but I just want you to just grab this concept. If you can grab this, every other thing, you just put them all in place. Where is price coming from? Is it, the origin of the move? This is our origin of the move that came, and then from here you see that price came down and broke structure from here, and then this became our valid POI. And then what we want to see is, lastly, we want to see liquidity. We want to see liquidity. Let me use a capital letter from here. We want to see liquidity. Yeah, that's our number four. Break structure. Sorry for putting this here like this, but let me see. Okay, I could just get this here. This one out here. And a fair value gap. I want to see a fair value gap. Liquidity to validate our point of interest. It's that simple, guys. Before you take a trade, before you go into the market, these are the three things you look out for. You check out for your directional bias. Are you bullish or bearish? And then where is price coming from? and where is price leaving to. So you look for the origin of that move. Once you can identify the origin of that move, that becomes your POI. And then that move, the origin of that move must break structure, must leave behind fair value gap and liquidity to validate our point of interest. This is how simple it is. And if you had moved from here, taken this from this point here, we discovered that there was liquidity, price created liquidity down here. Will I mark this or will I want to mark this one? I just put this from here. So this from here. Just put liquidity down here. And price came untapped, and we discovered that there was no, it didn't really get into our point of interest. So we waited again, and then price came and did this. Let me put our button here. Price came here and did this. This was our point of interest, and this was our take profit right here. Very nice 1 to 5 risk reward, and you can see clean entry. And the same thing, when we did that, price came up and created this high, and started going up. So we looked out for the origin that broke this move. It wasn't this one, it was this one. Like, there was a bit of a pullback, then price came in and engineered the move that broke the structure. So that became my point of interest. So if you see, we moved price down, price did not take out this low, and then you see this was a clean sweep. Price came down here and took out this, and this was even CPI news around this area. But this would have been a clean sniper entry all the way targeting this high. Now you see, guys, this is how simple trading can be. Not, fancy things you see. It's really quite simple. Once you keep it simple, you understand um where price is coming from, creating liquidity and moving in your direction. You see that your setup you know, will be almost flawless. You can see we had like two flawless setup with very little drawdown, you know. And then I could show you some other part. Let's go see where price tapped out in the past. If you check my previous video, price came here and tapped right here. Let's see how we can get this. Yeah, so I'm going to shrink this a bit, bring this down here. Now this is our point of interest here, where price came up here, left liquidity, and then this was a point of interest at this point where, if you check my previous video, you see that we got this entry right here. We got this sniper entry right here. There's a lot of liquidity build up around here. Price did that and came up there, and see, price came tapped in here, engineered a move from this point and broke structure. And broke structure. You see, I'm analyzing from the 1 hour time frame. I've gotten on my directional bias. My 1 hour time frame is, where I usually would take my entries, because it gives me it gives me a clean, you know, picture of what price is doing. I usually would take my trades from the higher time frame. The lower time frame has so much noise, so I like to keep it less noisy. So yeah, so this is it. And price came up here. This became my point of interest. Now you can see we took like two trades. There was a trade we took here at this point because it was an entry for us here at the Trade FX Academy. Price almost tapped us out here. That is why I like to keep a bit of distance away from our point of interest, just in case. Price almost tapped us here, but then we still got in the trade and we rode this trade to 1.3 hour came up about this angle when we saw price doing this retracement here. So this is it, guys. Three good trades, nice setup. Patience is always the key. You know, to be a successful trader, you must, imbibe the habit of patience. You can't stress this enough. Patience and trust trust the process. If price had tapped us out, fine and good. Price will always do what they want to do. But you are too sure that your setup for you is valid. So this is it. Three trades, three wins, nice setup, and we are good to go. So if we want to check all this in the lower time frame, let's try and see the 15 minutes and see what structure it gives to us. So you can see from the 1 hour, if we had refined this, that's why I don't like refining my auto blocks or refining my point of interest, my area of demand. I don't like refining them. You know, if I had refined this to this point, would have missed out the sniper entry right here. Now you see that. So I like to keep it, you know, this is where it was here at this red candle here. This is where it was. Yeah, this red candle. So I like to keep it simple. So this is it, guys. Follow me for more trading tips. If you'd like to join my Telegram channel, it's the same handle at Trade CFX Academy, where we post, daily trades, daily setups. We try to see how we can build our community. Please do like, share, and also don't forget to subscribe because we'll be bringing in new videos. I'll be creating a series of teachings on structures, liquidity, and how to spot institutional order blocks. That those are the basic things you need to know. Once you know all this, those basic things, it will help on your win rate in terms of how you approach the market instead of blowing your account all the time. So thanks, guys. That will be all for me for today. I'll be coming up with more insight and more analysis. you know Thank you for joining me, and stay blessed.